Hey, what's up, everyone, and welcome back. I hope you're ready to dive into today's stock madness. We had disappointing retail sales sparking worries, the Fed's big meeting looming large, and global markets sending surprising returns. So find out how it all hit our portfolio, plus see how our strategic test funds performed, and grab today's must-know tip to dodge the hidden risks that could wreck your portfolio. All right, let's get started. All right, taking a look at the market today, we were up across the board. So the S&P 500, we were up 0.64%. The Dow, we were up 0.85%. NASDAQ, 0.31%. And the New York Stock Exchange Composite, we were up 1.37%. So a lot of that positivity was driven by some returns over in the European and Asian markets, bolstered by some local Chinese spending bills that are going through as well. We did see some positive returns based on the scheduled discussions between Trump and Putin to talk about the ending of the war in Ukraine. So market reacted positively to all of that today. Getting into some of today's top events, we experienced a disappointing report on retail sales. Sales increased only 0.2% in February, which was below expectations, and the spending was up less than expected. The Federal Reserve is meeting this week. Investors are anticipating up to a 3-point cut, as inflation remains sticky at 2.9%, above the Fed's target of 2%. Now, this could impact market liquidity and borrowing costs, which are key factors for stock valuations. In terms of global influence, Asian stocks rose today, driven by optimism over China's economy after Beijing outlined measures to boost spending. This despite President Trump escalating his tariff plans, another 25% on Mexico and Canada, and an additional 10% on China. And then, like we mentioned, Reuters reported today that upcoming talks between Trump and Putin to discuss ending the Ukraine war are potentially what pushed markets up today. All right, so let's take a look at our portfolio's returns for today. Looks like our portfolio essentially ended even. We did see a slight return there, not quite what the S&P 500 had. Obviously, we would have liked to have at least replicated what the S&P 500 returned today, but we did see a little bit marginal return. However, if you're new around here, we are still beating the S&P 500. We've experienced about a 4.52% gain since the end of January, while at the same time, the S&P 500 has experienced a 5.62% decline. So we are leveraging a lot of the methods that we coach in order to try to build and manage this portfolio over time. And about a week ago, we did rebalance with some new assets. Now, in terms of today, in terms of some of the best performers, we did see MNSO Group, which is a company, it's a fashion department store out of China. It's a global company, but with some of the the positive news about the Chinese economy and spending over there, they saw some good returns as well. Academy Sports here in the U.S. Experienced one of the better returns on our portfolio today. However, we were pretty much kept at even because we did experience some losses with Tesla, as well Valco Energy and Reddit. So that's our performance for today. This week's top performing strategy so far is Alpha, with Trainer's Measure hanging right in there. Last week, we saw good returns for expected return stocks, which we felt might be an indication that the market downturn had bottomed out. And today, stocks that did well are the ones that create short-term independent returns, Alpha, and then the ones that do well based on volatility, Trainer's Measure. So this could mean that our assumption last week was correct, but we'll see. Now, we're starting a new section today where I take time to review the prior week's performance for one of our strategies, and today is Monday, and on Mondays we're going to cover expected return. So in case you forgot what expected return means, or you're new around here, it's just the average return over a period of time, and it can be a good reference when investors are looking for stocks producing consistent price growth over time. So in terms of the performance for expected return, as you can see across the board, everything was positive, but the larger portfolios, specifically those with 12 and 30 assets, performed the best. Now, taking a look at the return history, it was actually short-term that performed the best, being 1 year. However, if you're looking for consistency, once you got above 5 years, you received a pretty consistent return. And then taking a look over here at the matrix, you can see that the best performing expected return portfolio last week was the one with 1 year of history and 30 stocks coming in with a return of 1.435%. So just as a reminder, we have 1,225 test funds that go into the creation of these charts. And for expected return, we have 245 test funds that are specific for expected return and go into these charts that you see here. One of the aspects of having this daily video that I really like is being able to share tips with you, whether that's basic definitions for certain terms or a little bit deeper understanding of how I read into things. So moving forward, I'm going to integrate a daily tip into this broadcast, and we're going to talk about a new item every single day. So for today, we're going to talk about our fundamental metrics. Now, in relation to the problem, it's hard to understand which metrics work well for stock selection. That's why we built these test funds to find out if there are some out there that work better than others. And we actually tested 11 different metrics, and we arrived at 5 that are the core of what we coach. So as you can see here on the screen, they're expected return, alpha, Sharpe's measure, trainer's measure, and then an overall ranking average for the other 4 metrics. And knowing these are a must. Not only the 5 core metrics that are here on the screen, but also all the underlying metrics that go into those and can help you develop a better understanding of how to leverage each of them. And if you're new to investing, the metrics here are definitely worth spending your time learning more about. So stay tuned because they're going to be part of our daily tips. Well, that's it for today. I hope you enjoy the new format. Be sure to make a comment down below to let us know what you think, and we look forward to seeing you back here tomorrow. Until next time, I'm Matt Franklin. Have a great night. Hey, just a friendly reminder, if you could push something below the video.